Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull bear point and figure market breadth summary chart for February 24th, 2019. Market breadth. With this past week's market advance, our bull bear point and figure ratio at 2.00 rose from 1.64 last week. The total count of securities in bullish or bearish patterns increased 1% to 3,229. The count of bearish stocks decreased 11%, while the count of stocks in bullish patterns increased 8%. The Pirls P&F market breadth summary chart shows us a market now 7 weeks in bullish territory. Paid subscribers have access to the open office calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking membership, clicking register, and following the prompts. To receive the weekly Pirls stock market commentary via email, free of charge, simply enter your name and your email address in the spaces provided and click subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 159 points for the 13th advance in 24 weeks. At a positive 724.29 points, it continues above 5 of the 6 tops above plus 100 in the last 30 months, and it continues above all 5 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in accumulation mode with higher average daily volume than the prior week. In the last 2 weeks, the Nasdaq had 5 accumulation days and no distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in accumulation mode on lower average daily volume. Momentum. At Monday 114 close, the CCI 20 daily had 6 days above zero, forming a Woody's uptrend, now at a positive 107.76, down from a positive 114.79 last week. The CCI 20 daily continues outside the plus or minus 50 range, and will need to fall back into that range in order to form a zero-line reject long entry point. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 14 weeks ago, while the daily CCI 20 began a Woody's uptrend 5 weeks ago. The CCI 20 weekly, in a Woody's downtrend, rose to a positive 103.25, up from a positive 69.46 last week. With 3 weeks above zero, it continues outside the plus or minus 50 range required for a valid zero-line reject entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and only 2 of the bottom 5 are negative. Summary: some tech on the top, oil services and REITs on the bottom. Bullish, networkers continues in the top 5. Disk drives has re-entered the top 5. Oil services continues in the bottom 5. Bearish, REITs has entered the bottom 5. Gold and silver has left the bottom 5. Focus this week from www.peakprosperity.com. We're living in the Groundhog Show by Chris Martenson. The following are a few highlights. It's said that truth mirrors fiction. I'm finding this to be the case more and more these days. Take the 1993 comedy Groundhog Day. Bill Murray wakes up each day to relive the exact same daily circumstances and interpersonal interactions. He relives the same day, February 2nd, over and over again. No matter what he does, the repetitive cycle won't break. He goes to sleep, wakes up to his alarm, and it's the morning of February 2nd again. Likewise, in The Truman Show, Jim Carrey lives in a simulated environment where everybody's an actor in a popular TV show except him. For him, it's his real life. But although he doesn't realize it, everything around him is completely scripted and fake. If we merge these two movies together, they perfectly describe the world in which we live today. Welcome to Groundhog Day meets The Truman Show. Let's call this mashup the Groundhog Show. In this composite story, you, the plucky central character, wake up every day in a world where the same mistakes are made over and over again by our so-called leaders. Take the central banks, for instance. In this show, they continually blow massive credit bubbles over and over again, which then result in widespread painful losses when they inevitably burst. And the central planners keep doing this without any indication that they're aware they're repeating the same mistakes. Their learning curve is dead flat. Every day follows the same script as the previous day. The Fed's attempts to defeat the business cycle by replacing it with a credit cycle ended badly in 2000 with the horrible dot-com crash. Doubling down on that strategy then created the housing bubble and the Great Financial Recession, which resulted in an even worse crisis in 2008. Neither of those sordid outcomes has factored into the Fed's thinking at all, as they, along with the other major world central banks, have set about tripling down on their serial bubble-blowing ways, which have resulted in the biggest ever everything bubble the world now finds itself in. There are no good explanations for that behavior, save this one. It is difficult to get a man to understand something when his salary depends on him not understanding it, which really isn't very satisfactory to those of us who are also stuck in this movie, but cursed with the ability to see and remember cause and effect. The larger plot of this movie, of course, revolves around the increasing difficulty of those stuck in it to continue to buy its premise. Once you lose the plot line, once you can see the programming for what it is, it becomes nearly impossible to continue to happily participate in a story that lacks any integrity and provides no meaning or purpose. For example, the Yellow Vest movement in France consists not of a relatively few disturbed extremists on the fringe, but of the majority of the French population. Most citizens of France support and sympathize with the movement. Losing control. Authorities fear losing control of the narrative. If they do, there's nothing separating them from suffering the consequences of their disastrous and self-serving decisions. This is why, instead of talking with the Yellow Vests and carefully weighing the concerns of the majority of France's populace versus the limitless greed and quest for power of its ruling class, the government has instead responded with a full media blackout of the Yellow Vests movement and its demands, while steadily demonizing the protesters. They're conspiracy nuts. No, wait, they're anti-Semites. Their popularity is dwindling, but won't let you access the actual underlying polling data. There's nothing to see here. Return to your regular programming, and so on. One of the most important things you can do in these last days of the old system is to identify and understand the narrative programming you're being subjected to, so that you can be resistant to its malign influence. Nothing good comes from allowing others to decide your priorities and to dictate your emotional responses. It's time to free yourself and notice what's actually happening. To do that, you have to stop watching the screen and look instead at the theater that's been constructed around you to mimic reality. Thank you for watching this week's Sand to Pirls Stock Market Commentary video featuring the proprietary bull bear point and figure market breadth summary chart compiled by Donald Pearl. www.s2pmarketsignal.com. For Sand to Pirls Stock Market Commentary, I'm Cynthia Pearl, hoping that you have been enjoying a peaceful and pleasant weekend, that you're looking forward to a prosperous and productive week coming up, and wishing you true success.